Hi guys, it's Thomas here from COTBase.com. Welcome to a weekly COT review. Today we're going to be analyzing the 8th Commitments of Traders Report of 2026, and as we always do, we shall start out by looking at the largest changes in commercials net positions. Before I jump to the review, for those who are just joining in and getting started with COT analysis, here at COTBase.com you'll find a lot of educational material. Not only do we have these in a written format, but we actually have some very good videos that can help you understand how this report works, how you can benefit from the information. Of course, if you need further assistance, we are here to help you. You can book a consultation or just simply comment underneath the video. Send us an email to info@cotbase.com. Let's get to our review. As you can see, I've already ordered the markets based on largest changes in commercials net positions. We are, of course, analyzing the classic COT report. It has the longest history of COT data. It's simpler, easier to understand. It's dividing open interest into three main trader categories. We've got commercials, of course, there to hedge in the markets against their business risks. And then we've got speculators, large and small. Obviously, those who do not reach those reporting limits fall under the non-reportables category. At CFTC, we call them simply small speculators. Usually they correlate with large speculators, not everywhere. Livestock, for instance, is an exception to that rule. But anyways, just to move on, we are analyzing futures and options data. And as I once said, we have copper on top of our list with a 21% change in commercials net positions when we analyze the recent change compared to the past 52 weeks. Okay, that corresponds to 1 year. So what you're looking at is this entire time frame, and you can see that this recent change in commercials net positions is actually the largest change that we've seen in the past. We can start somewhere over here. This was a bit larger than average change size. This is the report date. This is when we actually got to know about it. So a little bit, sometimes there's that, 4 days lag that can be a bit, inconvenient. But it turned out to be a successful signal. And in the short term, it can push the market in the signal's direction. Then we had slightly larger than average change size over here. Not much of a reaction, maybe halting the pace of the rally. We had a larger than average bearish change over here. No reaction whatsoever. Okay. We had slightly larger than average bullish change signal over here. Just conforming this rally that's been going on. And then we have this bearish change, and one might ask, is this really going to push the market back down? I suggest for those who want to do a deep analysis to look at correlating markets. In the case of copper, I'd probably look at gold, silver, platinum, palladium, and get an overall understanding of metals. Because if one goes, especially if gold starts to go higher, then we can expect copper to follow. But anyways, it is there. It suggests we may see a bit of a decline early next week. There has been a bit of a strengthening overall, not a huge weekly move, I'd say, but it's there. Moving to a 5-year chart gives us the chance to examine stress levels in the market, which is leaning towards the bearish side. No question. We did analyze gold and silver in the past few weeks. Those were less bearish for sure. So it seems as if copper is not as, at least from a COT analysis perspective, isn't really showing that much of a strength or possibility of continuation in this rally that we've been witnessing for the past few years now. Moving on to our next market, wheat. We have, of course, different type of wheat. This is the Kansas City wheat. We have a 20% change in commercials net positions. The reason I opened the charts is the number in itself doesn't really mean much until you open the chart and try to understand the magnitude and relationship to everything else. So it's kind of an eyeballing thing you do. There was a bullish COT change signal over here is just slightly larger than average. It wasn't that big. I probably wouldn't have, acted upon it. But now, of course, looking back, it did seem to be a successful signal, although it came, a little bit late. Now we have a bearish change signal, which is something that I like to see in relationship to the price movement. So it's coming at a point where the market is rallying. Who knows, is this a significant resistance level? If so, this bearish change signal may be something we would like to take into consideration. The extreme in this market, once we open a 5 years chart, is really not that obvious, I'd say. So in the short term, if I just look at, let's say, the last 2.5 years, it's leaning a bit towards the bearish side. But if we look past that and go back like 5 years, what we have right now, you can see that the extreme could get even crazier, and that's not the case right now. So again, another market where COT data isn't that precise or isn't really painting us a very clear picture, but that's just part of the game. We're not going to see each and every week very, very clear pictures. Lean hogs is going to be our next market. Here we have a 19% change in commercials net position, this suggesting a rally, again, bullish change signal, and we are closer to a bearish COT extreme level right now as we look at this 5 years chart. I did forget for a second to stop after I was doing the analysis on copper, because I have copper as an example to showcase our unique and self-developed indicator called the iCOT Intraday Indicator. So what you see here is copper futures chart, but in contrary to our normal charts, which are daily candlesticks, of course, and we're talking about a weekly data, the COT data is a weekly data. Our indicator, the iCOT Intraday Indicator, that has a component called the iCOT scores, is sort of like a COT index. And it does a lot of calculations and a lot of analysis in the market, combining price, volume, and a lot of data to come up with these index charts, basically, that are very, very similar to what we are used to with COT analysis. So it's a tool that you can use to bring the concepts of COT analysis into the shorter time frames. And what you see here is the this updated version. So we've got a couple of indicators. Let me just show this to you for 1 second. So we've got the Pro, that's the classic COT data analysis. It's available on NinjaTrader, whereas the iCOT Intraday Indicator, it's got a basic version with only the signals, and then it has its upgraded version that filters the signals and really helps you identify the best point to get in. So for instance, over here, what you see, we've got these candlesticks changing color. That is signaling an extreme in the large speculators. Let's call them large speculators. But it will tell you the time to actually enter the market. And it will give you a stop line to help and assist you in staying in the market, right, for as long as the trend is there. So this tool really helps you identify better points in time to enter and, of course, exit the market as well. Something I would definitely consider trying if I were you. If you have any questions, don't forget we're here to help you. Oh, and by the way, if you are enjoying this review, please consider hitting that like button and potentially subscribing to the YouTube channel, because then you're notified if we have new videos coming out. Moving on to large speculators COT extreme analysis. So we just simply look at how many weeks or reports pass since we've seen the recent extreme in the market. So meaning how traders are positioning themselves. So in this case, we have an all-time COT extreme in large speculators. So of course, large speculators are in green and commercials are in red. And all-time simply means that if we gather the entire data on sugar, I'm talking about COT data, we've never seen such an extreme in the market. So it's a huge, huge extreme. It suggests that sugar is coming to this decline in sugar, to be a little bit more precise, is coming to an end. So anybody who is heavily shorting this market, let's say you've been preparing for a short based on the bearish extreme around this time period in 2023, might want to consider taking profits off the table, or just preparing for the setup on the long side. So that's sugar. Great signal over there. Actually, we are talking about the same markets as we did last week, but it is what it is. These are the markets that we should keep our eyes on. The Australian dollar extended its extreme. Now it's at a 432 report extreme when it comes to large speculators, and 435 report extreme for commercials. So significant extreme, suggesting the rise in the Australian dollar is potentially coming to a resting point, and we may see prices coming down. And that's the same for the Canadian dollar. Of course, these are currencies that are very, very similar, and I'm not surprised to see the correlation between the reports. So this is a 182 report extreme, both in large speculators and in commercials net positions. It is a extreme suggesting weakness coming. So similar picture as the Australian dollar. And that's pretty much it. That's it for this review. Of course, these weekly reviews I issue are just a little glimpse on what's going on in the COT report. And hopefully you will get interested and excited about this wonderful report and give us a chance to showcase our services. Come to COTBase.com and consider subscribing to one of our memberships, either the website or the indicator, or both. They do supplement each other very, very well. Once again, if you've got any questions, feel free to comment underneath the video or send us an email to info@cotbase.com. Thank you very much for your attention. Have a wonderful weekend, and I hope to see you in my next weekly review. Take care. Goodbye.